Hello, welcome back to Rodan and Fields Web. Hopefully at this point you are either one of our reps within our team or you are strongly considering becoming an independent consultant for Rodan and Fields, or maybe you just found us through social media or the internet and somehow you're on this video. But it's a 1099 world. A lot of people don't understand exactly what business write-offs are and how you can benefit from owning your own business and write off expenses so you can keep more of the money that you make. So I'm going to use an easy example. Likely you have already watched our introduction video on the homepage. If you haven't, you should definitely visit that after you watch this video. But I'm assuming most of you have probably watched that video. You're either a rep or it's something that you're considering. So from that video, you knew that I did $100,000 and $102,000 in income last year. W-2 income. Now a lot of people, they understand W-2 income. When you make $1,000 a month, you really don't make $1,000 a month though, because the taxes that the government is going to take from your paycheck are already taken out of your paycheck before you receive it, of your pay. So again, let's say you make $1,000 in a month. We all know you don't receive a check for $1,000. You don't get $1,000 deposited into your account. You get a check for $700 because that $300 was already taken out from the government. Well, when you're 1099 with Rodan and Fields or any business, independent consultant business, you're going to pay your taxes at the end of the year. So you're going to actually receive that $1,000, and it's your obligation, it's your duty, it's your responsibility to pay those taxes at the end of the year. So quickly, quick rule of thumb is when you start receiving your checks from Rodan and Fields, take 20%, at least 20-25% off the top and put it into a savings account, because you're going to owe the government taxes at the end of the year. But the beauty is you get to write off all of your business expenses before you actually show the income that you made to pay the tax. So again, the easiest way, you know I love the whiteboard, let's just use an easy example. So myself, again, last year, we'll just use my W-2 as an example if this was W-2 or had it been 1099 income. So again, we're rounding the numbers. Let's say I made $100,000. Well, again, we all know I don't have a pile of cash of $100,000. The taxes were already taken out. So it shows here federal income tax of $24,172. Again, we'll make it easy. We'll just say $25,000. The feds took out $25K right off the top, 25%. $5,000 was for Social Security. $1,500 was for Medicare. And then I had $5,809. We'll call it $6,000 for state tax. So when you add that up and you minus it from $100,000, the actual money that I took home, that the pile of cash that I had, was $62,500. So I was taxed at 37.5%. Okay, now that's a lot of money, $37,500, and again, I wish I could have wrote some of that off, but I couldn't because I was a W-2 employee. So now let's use the example of 1099. So same formula. Let's say that Rodan and Fields, let's say I made $100,000 from Rodan and Fields. Over the course of a year, I received $100,000. Now I got $100,000, remember, because I pay that tax at the end. And I'm taking, 20% off the top to put it in a savings account because I know I'm going to owe something. But that's not before I get to write off my business expenses. So as a rep, as a business owner, there's lots and lots of things that you can write off. And the easiest, let's just say your telephone. you obviously use your cell phone to talk to your business partners, your prospects, so on and so forth. In today's day and age, we'll call that $100 a month. I mean, any phone plan that's a smartphone is going to be at least $100. So we're going to say $1,200 for that. So you get to write that off. And then the next big one is gas. Obviously, you are driving around. Now, you're posting up the little bulletin things from the first one. You're talking to people. You're always talking about Rodan and Fields. So technically, when you're driving around and you're going places, you know, we don't want to cut the system or to work the system, but in all reality, you're going to be talking about it a lot. So really, you can write off most all of your gas. If you take a trip on the weekend to go fishing in Idaho, then, you know, at night you talk to some people about Rodan and Fields. That's a business trip. That's a write-off. You can write that gas off. So let's say you do, well, God, it's got to be at least $100, $200 a month. We'll call that $2,500, and that's being conservative. Let's say you write off $2,500 a year in gas, and that's being very conservative with the amount that gas costs today. I would say $2,500 is very conservative. So let's think about some other things that we can write off. Well, how about your internet at your house? You're online, you're doing things. That's a business expense. You can write that off. Let's say that's another $50 a month. So that would be $600. So you're going to write off $600 for internet. And then what are some other business expenses? Entertainment. When you go out to lunch with your friend and you have lunch, you talk about Rodan and Fields. Well, that was a business lunch. That was an expense that you can write off. So let's say you're going out, we'll say 100, we'll call that $1,500 a year, or, you know, let's say 2,000, because these are all very conservative numbers. Very conservative numbers. Another one, and this depends on the state that you're in, but let's say you have your computer in a little office at your house to work on Rodan and Fields part-time at night or whenever you're doing it. You can write off that square footage from your mortgage. So let's use another very easy example. Let's say your mortgage is $1,000 a month, and the office, your house is 1,000 square feet. Again, this is just an example. And your office, your bedroom that you use is 250 square feet. So it's 25%. It's 25% of the square footage of your house, which is 25% of your mortgage. So let's say $250 a month. To be conservative, again, depending on the state and where we're at, we'll say another $2,500 that you can write off for your office. Well, that's great. That's another $2,500. And let's start to think some more. What are some expenses that you're doing? Office supplies. You do pens and paper and ink cartridges for printing and different things. We'll call that $500. Let's say you can find a way to write off $500 for business expenses, office expenses, excuse me. Going on down the line, you can see where anything that's related with your business, you can write off. And again, this is just an example of to show you exactly how it works. Let's think of some other things that you can write off: the depreciation on your vehicle if you keep a mileage log, if you do different things. Let's say you took a vacation during the year and you went down to Florida. Well, while you were in Florida, you had business cards, you talked to people. That's a business write-off. Again, not for your whole family, but let's say your plane ticket was $500, and then you did some food, you did some other things. So we'll throw in another $1,000 there for travel expense, and then it comes towards the end of the year. It's November. And again, you want to write off as much as you can because you don't want to pay taxes on the money that you earn. You decide to buy a new computer, you buy some new office furniture, you buy a new desk in your home office because you're making some money. Let's just say there's some wild purchases that, again, they're associated with your business. You buy a new iPad or something, whatever it may be, those are all business write-offs. So we're going to say another $2,000. At the end of the year, you just decide to write off a couple other things that you wanted to buy. Now again, this is going to be much higher than this. This is just an example for this video presentation. So let's add this up. We've got 1,200 plus 2,500 plus 600 plus 2,000 plus 2,500 plus 500 plus 1,000 plus 2,000 equals $12,300. Now, I'm telling you right now, it's going to be much higher than that. So I'm going to say 15,000 just to be, again, make it easy. But it's going to be more than that once you start writing off all these things. So that's 15,000 in business expenses that you wrote off. So now that it's the end of the year, when you do your taxes, you don't need an accountant. I mean, you may already have one, but I use TurboTax. It's a wonderful program. It asks you all the questions. Did you receive 1099 income? Yes. How much was it? And then it'll ask you about your expenses after that. And it will go to a Schedule C, which it pre-populates. But so 100,000 minus 15,000 is actually 85,000. So really, I only brought in 85,000 in income. Now that drops you to a lower bracket as well, so you're going to be taxed less because in this country, the more that you make, the more that you're taxed. I won't get into that. 85,000, right, times 37.5%, but it's going to be less than that, but we'll just say 37.5% times 0.0375, or excuse me, 85,000 times 0.375 equals, 85,000 times 0.375 equals 31,875. Okay? So that's what you're going to owe the government at the end of the year. You're going to pay them $31,875. $875. That's what you're going to pay in taxes. Well, remember, over here, W-2, how much did I pay in tax over here? $37,500. $37,500. So just by writing off these little expenses, and then we'll do 37,500 minus 31,875, $5,625. $5,625. So, that's pretty impressive. I would have actually had $5,625 more cash in my pocket had I been able to write off some business expenses. And again, I'm being so conservative with this. When you really start to look at it and do some research online on things that you can write off, it just adds up and it adds up and it adds up. I maybe should have prepped a little more before this video, but essentially that's the idea. So instead of paying taxes on $100,000, you're paying taxes on $85,000. So the object of the game, what you want to do is you want to write off as much business expense as you possibly can to show the least amount of income possible, which you will then have to pay tax on. And essentially all you have to do is just save receipts. You know, you've got receipts here for gas, and you've got receipts here for this, and so on. And just save the receipts, throw them into a file. I keep them all very organized: gas, food, expense, entertainment. But you could just literally just start putting them into a folder, and then at the end of the year, you go through that folder and you write off your expenses. Plus, if you do donations, again, your vehicle depreciation, it just goes on and on and on of what you can write off. And you're going to keep a lot more of the money that you end up making. So hopefully this explained a little bit about why it's such a great deal to be a 1099, to receive 1099 income versus W-2. And hopefully this makes your decision, if you haven't already enrolled into our program, a little bit easier, because it's great to be a business owner, and it's great to write off business expenses and keep more of the money that you actually make. Again, get in touch with the person that got you in touch with this video, and if it was myself, please contact me. But we really appreciate you visiting Rodan and Fields Web, and we look forward to working with you. Thanks so much.